Hey guys, welcome back to the series. So, in part one of the trading strategy, I showed you how I do my top down analysis using trend lines, key levels, identifying patterns, and supply and demand using supply and demand. In this part two, which is the final part of the whole series, I'm going to show you how I actually enter a trade. I use a simple trading strategy. It's nothing complicated, it's just structured and it's repeatable. So let's get into it. So when it comes to the strategy, I'm looking for four main things. I'm looking for market structure, or basically the trend. I'm looking for a breaker structure, or I'm looking for a breaker structure, or another thing to call it is an indication that price either wants to go higher or lower. And then I'm looking for a correction, which is basically finding the zone and waiting for price to come back to that zone and tap the zone. Then I will enter the trade and secure profits or hit stop loss, whichever way the trade goes. Once those line up, that's when I enter the trade. If they aren't there, then I won't take a trade. All right, so let's get into the actual breakdown, starting with the market structure. So what I ask myself when I am looking for the market structure is, what direction is the market currently trending? So in this example, to the left, you see price is on a downtrend. Now, normally I would have my trend lines here, but for the sake of this example, I did not have that marked up. But yes, I would have my trend line and it would show me that price is on a downtrend. Even if I didn't have my trend line, because like I told you guys, those are just visuals, I can identify the trend because I know I have a high, a low, a lower high, and a lower low. That lets me know that's a downtrend. So I'll check it off. Yes, this is bearish, or this is a downtrend, or sellers are in control. All right. So now let's get to the second part. The second thing that I'm looking for is an indication. And I'm telling you, it's so simple. I'm going to breeze through this. Okay. So the second thing that I'm looking for is an indication. I'm looking for a price to let me know, since this is a downtrend, I'm looking for a price to let me know that it wants to push lower. So price needs to break structure. So I'll look for the previous low, the previous lower low, because this is a downtrend. I'm looking for the previous lower low, and I need price to break that low to let me know it wants to push lower. So let's zoom in on this picture to the left, right? We see that price broke structure to the downside because price pushed past that blue line. The blue line is where my previous low was. Once price pushed past that blue line, it lets me know, okay, sellers are still in control. Price wants to continue to go down. So back to my checklist. Did price break structure? Yes, I got the indication that price wanted to push lower. So now we can move on to step 3. Step 3 is, has price tapped your zone? If so, plan an entry. Step 3 is the correction phase. We're waiting for price to come back to that zone and tap the zone. Once price tapped the zone, that's when we decide, are we getting in aggressive? Aggressive means I'm getting in as soon as price taps the zone. It doesn't matter how big or how small the zone is. I'm getting in as soon as it taps the zone. That's aggressive. Conservative is I'm getting in once price tap the zone and close outside of the zone. That's when I'm getting in conservative. And then safe is I'm getting in price tap the zone, price close outside the zone, and I'm waiting for momentum continuing in the direction that I think price is going to go. So for this example, it will be sales. So let's slow down and let's rewind it. Let's use our example. So in this example, as you can see, we had our breaker structure. Price pushed out of that zone that I have marked up here, right? The zone is going to be the previous candle of the opposite color. that is the candle that price pushed out of. So that is our zone. So we'll put a, so what I do is I put a rectangle around it, and that helps me to identify my zone. Then we'll wait for price to come back and tap the zone. And this can take a while. This can be immediate. It all depends on price action. This is the part we can't control. If price comes close to the zone, that's not a tap. We keep going. So price goes. We got another break of structure. As you can see, price pushed lower than our previous lower low. So now we identify which candle price pushed out of, which is always the previous candle of the opposite color. We'll go ahead and mark our zone. Now we have a new zone because we have a new break of structure. We mark our zone, price continues to push down, and now we have a tap, right? Which will lead us into our last step. The fourth step of this strategy is identifying the stop loss and take profit. You need to know what you're risking and what you're securing when it comes to trading. So for this example to the left, we are aiming for a 1 to 2. So for example, if it's a 1 to 1, if I put in 100, I know I'm either risking that whole 100 or I'm gaining 100. So for a 1 to 2, if I put in 100, I'm only willing to lose $100, but I'm willing to gain $200. So for this example, that is our stop loss and take profit. We have it marked up with this tool that I use on Webull. It lets, the white line is where I entered the trade. And then from that point on, as the trade is playing out, as you can see, we hit our 1 to 2. We are now out of the trade and the trade is done. You want to remember, if you don't have all 4 of these checked off, there is no trade. There is no trade. I don't care if the candle came close and took off. There is no trade. The candle must come back and tap your zone. That's like the main important part when it comes to the trade. Making sure you don't have FOMO just because a candle came close to your zone or whatever the case may be. Also making sure you identify your right zones. Also making sure that there is a trend and that you're not identifying these in a ranging market, which is the sideways markets. You want to follow the strategy to a T. All right. So we're done with the series. This was the full breakdown of the whole strategy, from understanding what trading is to futures to how I actually enter my trades. Everything I showed you is exactly what I do when I'm approaching the markets and trying to find a trade. Again, remember, I'm not a professional. I'm not a financial advisor or anything like that. I'm still learning every day. I'm just sharing my journey with you all as I go. I try to keep it simple and straight to the point, but remember, simple doesn't always mean easy. You still got to put in the work. You still got to put in the time, and you still have to actually learn the market. But if you made it this far, I appreciate you. And if this helps you understand trading a little better, definitely leave a comment, like the video, subscribe so you don't miss any videos. I will be dropping more videos, more breakdowns, more of my own personal trades, because again, I usually just trade and upload it and use it as my trading journal, because I can go back, rewatch it, and see what I did that day and what I could do better, so on and so forth. So yeah, I hope that helped. I'll see you guys in the next video.